Hey everyone, Joe here from Avalon. We're continuing to ramp up to the launch of our 7-day business starter course with step 3 of our business launch process, mastering your finances. You'll learn about income tax obligations, how sales taxes work, and our proven methods for setting up an efficient accounting system. Have a look in the description below for a link to our finance mastery checklist to get your own accounting systems dialed in. You'll also find a pre-launch discount code that you can use to enroll in the 7-day business starter course once we open it up to the public. All right, enough of the preamble. Let's get down to mastering your finances. First up, I'll outline the key information that you need to be aware of as a new business owner when it comes to income tax compliance in Canada. And we'll begin with the fundamentals: revenue, expenses, and net income. At its simplest level, income tax is calculated based on your net income, not your total revenue. So what does that mean? Well, imagine your business brings in $100,000 a year. That's your revenue. But you'll also have expenses, things like rent, employee salaries, and supplies, to name a few. Let's say that your expenses for the year total $60,000. Your net income is your revenue minus these expenses. In this example, $100,000 of revenue minus $60,000 of expenses equals net income of $40,000. And it's the net income that gets taxed, not the full $100,000 in revenue. This is a simplified explanation, of course, but it captures the essence of how income tax is calculated. For tax purposes, if you're operating a sole proprietorship or in a partnership, your business income is directly tied to your personal income. In other words, the net income your business makes is what you report on your personal tax return. The tax rate will depend on your individual tax bracket, which varies based on your total income person. If your business is incorporated, the taxation process looks a little bit different. Corporations are considered separate legal entities, so they have their own tax obligations separate from your personal taxes. This means that corporations will have an extra tax return to file, called a T2, and they'll also have corporate tax payments to make when profitable. You pay yourself out of your corporation either by paying yourself a salary or by taking dividends. Next up, we've got details on how sales taxes work in Canada. We'll start with GST, HST before getting into provincial sales tax. GST stands for Goods and Services Tax, which is a federal tax that applies across the country. However, some provinces have a slightly different version called the Harmonized Sales Tax, or HST, which is a combination of GST and provincial sales tax rolled up into one. Whether you collect GST or HST depends on which provinces that you're selling in, but the treatment of the taxes is basically the same. Now then, the all-important question: when should you register for GST, HST? Most businesses will need to register once their taxable worldwide sales exceed $30,000 in any 4 consecutive calendar quarters. It's kind of like in a year if you'd make $30,000. When registered for GST, HST, you collect tax from your customers and later remit it to the government. However, you get to reduce this remittance by deducting GST and HST that your business pays on purchases. The formula for calculating your GST, HST balance owing is tax collected on sales minus tax paid on purchases equals the amount to remit to the government. Here's a quick example. Let's say a business collected $1,400 in GST, HST in a given period. It also paid $500 in GST, HST on purchases, including some expenses and the purchase of a digital camera. We know that the business has to remit an amount equal to tax collected minus tax paid. This means that the business will pay $900 to the government, calculated as shown on the screen here. Next up, registering for GST, HST. There are a few ways to register. You can register by phone or by mail, which is a bit slow and cumbersome. Or you can register with our favorite method, the Business Registration Online Service, or BRO for short. To register using the Business Registration Online platform, you'll need a bit of information on hand: your social insurance number, postal code and date of birth, your business number, your effective date of registration, your fiscal year-end date, and your estimated annual revenue. The system will take you through a wizard, yes, it's $19.95 in the CRA, to get your business registered for GST, HST. The process is surprisingly easy, which is not something we usually see from the CRA. After federal sales taxes come provincial sales tax, or PST. Provincial sales taxes are levied by individual provinces on some goods and services sold within their jurisdiction. Now, PST is separate from federal GST, HST tax that you're now familiar with. There are only 4 provinces that levy a separate provincial sales tax, which are British Columbia, Saskatchewan, Manitoba, and Quebec. Each province has specific rules around who needs to register and collect PST. Generally speaking, if your business sells tangible goods, aka products, in one of those provinces, then it should register for the applicable provincial sales tax. There are also some specific types of services in each province that PST applies to, but of course, these vary from province to province. It's important to note that each province has its own set of rules on what's taxable and when registration is required. We get into the details within the 7-day business starter course, but to keep this video succinct, I recommend checking the official information for your specific province. You can find those links in the description below. All right, next up, I'm going to take you through our favorite options for setting up your efficient accounting system. But first, I want to start with our most important tip for small business accounting. And I can't emphasize this one enough. Get a dedicated business bank account and credit card. These separate accounts are used only for business transactions. Avoid mixing business transactions in with your personal accounts. I mean it, guys. This truly is the one tip that will make your bookkeeping and accounting system way easier. Please do it. Please do it. There are lots of options for dedicated business bank accounts and credit cards. I usually suggest that if you're happy with your current financial institution, is that possible? Then start there. If not, then check our recommendations for the best business bank accounts in Canada, which is also linked in the description below. Once you've got a dedicated business bank account and credit card, you're well on your way to simplified accounting. Which brings me to the next step, which is choosing an accounting system. There are 2 simple methods we recommend for handling your small business accounting as a new business owner. And the first one is using a simple bookkeeping spreadsheet. Whether it's a Google Sheet or an Excel spreadsheet, this method is free to use and will allow you to get things set up quickly. We have a couple of great Google Sheet bookkeeping templates linked below that you can use for free. There's one for sole proprietors and one for incorporated businesses, so check them out. The second method is to start using a purpose-built accounting software right out of the gate. It will take you a few more hours to set up and will come with a monthly fee, but will also scale with you as you grow your business. Our top recommendation for accounting software is Xero, spelled Xero. If you do choose this option, check out our bookkeeping course link below that teaches you how to easily handle your small business accounting with Xero. To make the decision of which accounting system to use, we start by looking at your needs. Are you mainly looking to capture the transactional data for compliance purposes? Meaning, are you only trying to record transactions to help you file your taxes and sales tax returns? If yes, then a bookkeeping spreadsheet like the ones linked below can help you stay compliant. Or you might be looking for more financial reporting options. For example, do you want to review your financial statements every month and compare performance to prior periods? If that's the case, then accounting software is much better at handling custom financial reporting. Next up, you'll want to look at how you are recording and collecting sales from customers. Do you need to send invoices to your customers and clients, or are you recording sales through an e-commerce platform or a point of sale system? Accounting systems like Xero allow you to send and track invoices easily, while also making it simple for your customers to pay you via credit card. If you go with a bookkeeping spreadsheet, there are still simple ways to send invoices. However, you'll be manually compiling everything, which makes it much more challenging to keep track of who owes you money. Another consideration is whether you have any other applications that you would like to connect with your accounting system. If you're selling goods from a physical location, you might have a point of sale system and an inventory tracking system to manage. Or if you're starting an e-commerce business, you may want to connect that to the accounting system to automate some of the data entry. The more systems involved, the more likely you'll want to start off with a purpose-built accounting system like Xero. And lastly, assuming you're planning on scaling your business, when do you want to implement the system that will grow with you? A spreadsheet is simple and free. It can help you get your business up and running quickly during the startup phase. However, you probably aren't planning on staying around in the startup phase for too long. Depending on your budget, you may want to spend an extra day in the beginning to get set up with an accounting software that will grow along with you. Take all of these factors into consideration when making your decision. The way I would look at it is if you're building a business that you want to scale and you're confident in your offering, then spending the extra time and money to start with a scalable accounting system is worthwhile. However, if you just want to move quickly or just looking to test your business idea, then the bookkeeping template is a decent starting point. So you're now up to speed on income tax, sales tax, and you have an idea of which accounting system to use. Next, it's time to take action. You'll find a link in the description where you can get a copy of our Finance Mastery Checklist. We also cover all of these steps in detail in the 7-day Business Starter course. Check out the link in the description for a pre-launch discount code that you can use once the course goes live. All right, that does it for step 3 of our 7-day guide to starting your business. Keep an eye out for the next video in the series where we will build out a simple and effective marketing system for your business. Stay tuned and we'll see you in the next video. Cheers.